Welcome to Yellow Tunnel. My name is Vlad. I'm CEO and founder of TradeSpoon and Yellow Tunnel. And today I'd like to go over stock market analysis. I think this is a special edition since the market is at all-time high. We have FOMC decision this week. We have potential intermittent agreement between China and United States in the next 2 to 4 weeks. Official date is October 15th. So it's important to take a look at the market. So that's the purpose of this presentation. This is my brief bio. You guys can take a look at that when you get a chance. Disclosures, very important to read the disclosures. Trading involves risk and not suitable for everyone. I'm not a financial advisor. Please consult your financial advisor prior to making any trading decision. The presentation here is solely for general education. So I'm going to go over first discipline. You have to be a disciplined trader to trade in the current market condition or any market condition, but especially when the market is volatile. You have to be flexible in your position on the market. Sometimes it's appropriate to be bullish, sometimes it's appropriate to be bearish, sometimes it's appropriate to be market neutral. Currently I'm market neutral. I think market will trade in the range and probably not the right time to chase the market at these levels. So flexibility and your belief and opinion about the market is very important. Confidence, true confidence comes with experience, trading over a long period of time based on a solid trading plan and journaling to keep track of all your trades. So true confidence comes with experience and relying on statistics and focus on what you control. Very hard to predict what will be the outcome of FOMC decision on Wednesday. Expectation there will be a 0.25% interest rate cut. What's hard to predict is the reaction to the market for the forward-looking view on the interest rates. Will there be 4 interest rate cuts? Will there be 2 interest rate cuts in the next few meetings? And that will be determined if the market is going to rally or sell off. So how do you trade and what can you control? You can control how you enter the trade based on statistics and probability of success. So trades will provide you with short-term and long-term models to give you statistics on what's the probability that the stock or ETF will continue going higher, or will trade in the range, or will sell off. Looking at the key support and resistance level, market has been trading above 50-day moving average, right at the all-time high. So the range right now is defined by all-time high or 50-day moving average. There are 2 scenarios. Market will retract 50-day moving average, or it will break out of this all-time high overhead resistance. So the idea is to structure your trades based on probability of success. And the second lever that you can control is risk versus reward. Right now, if you're bullish on the market, I think it is appropriate to hedge your position, buying spiders puts, VXX, buying treasury sold off, buying gold sold off, all staying at the key support and resistance level. Raising cash, not be complacent in the current market, not just sit and wait, but since you know there is a major event next week, raising cash is important, and hedging your long stock position with cover call is another idea. So let's take a look at the market. First, looking at the short-term prediction. This is a stock forecast toolbox from TradeSpoon, 10-day prediction. Going into a FOMC decision, trend is positive. So we expect positive momentum for the next 10 days. Potentially trading between 300 and actually break out to the 313 level based on the 10-day stock forecast toolbox. Again, these models don't know that there is a FOMC meeting, nor do they take into consideration or try to predict what the outcome decision. But going into the FOMC decision, bulls are in control. The seasonal chart, this is a different model, provides prediction for the next 20, 30, and 40 and 50 days. Also, 3 out of 4 predictions are higher. Potentially, I said that before, based on seasonality, market can retrace to August lows by end of September. That's something that the market can do based on these time series and price series calculations and patterns. But usually, when the next earnings season starts, end of October, November, making all-time high. I think the seasonality will repeat itself this year. Current correlation is only 50%, so not a great correlation currently. Looking at the spiders, again, we're right at all-time high. This is the spiders chart, looking at the March through September. Market slightly overbought. We had similar setup end of July before the end of July FOMC meeting. So we'll see if we will repeat what happened in August, or the market will actually be able to break out. I would encourage you to be prepared for both outcomes. I personally think that we'll retrace back to 50-day moving average, or potentially actually 200-day moving average. But I do realize that based on the news, market can break out of the range. So you have to structure your portfolio and be prepared for both outcomes. You can take certain position on the market, but you need to be prepared for both outcomes. Looking at the gold, hasn't broke support levels, so we're seeing retracement closed at 50-day moving average. So gold hasn't broken the key support level. I would pay attention to gold. Treasury, very crowded trade, broke the 50-day moving average yesterday, sold off on above average volume. I think approaching close to the overhead, close to support. I think somewhere between 134 and 130, the Treasury will find the support, and I think we'll see a lot of volatility in Treasuries by end of this week. Looking at QQQ, also looks like the market rally is slowing down. We had this candlestick formation, which is bearish. And I think tomorrow would be important. If we close below this level tomorrow, I think that will open up the door to retrace to the 50-day moving average. If not, then we'll probably retest the all-time high again at 185. So I encourage you to view some of the videos I post under mental strategies and weekly market plan. This is weekly market plan where I talk about discipline versus market sell-off. Again, some of the concepts are flexibility on the market, not being married to the trade, have a true confidence that takes time. The discipline requires confidence, and also controlling the things that are within your reach, which are how much cash you have, how you structure your trade, and what your portfolio drawdown is. So that's all I have for today. Thank you very much, and we'll post another video by the end of next week. We'll have more news on the interest rate decision, potentially on if there is any agreements between the United States and China. Thank you.